If you've been tracking SoFi like I have, today probably raised a few eyebrows. The stock dipped, volume dried up, options activity spiked, and the news cycle? Mostly noise. So, what really happened with SoFi today? Was this drop justified, or are bigger forces playing games behind the scenes? In this video, I'm going to break down exactly what's going on with SoFi, from unusual short interest behavior to institutional sell-offs, and what that means for the future of this stock. Let's get into it. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi Technologies, ticker symbol SoFi, saw a noticeable decline today, falling about 3.35% over the course of regular trading hours. It wasn't alone in that drop either. Most of the growth stock space saw red today, but the curious part was why this happened. The trading range for the day sat between a low of 13.23 cents and a high of 13.66, but the downward movement was sharp and early. Practically as soon as the market opened, SoFi got slammed without any apparent cause. This wasn't triggered by a breaking headline or some unexpected macroeconomic number. It was a slide driven more by mood and mechanics than anything fundamental. Across the board, I noticed one consistent factor with several stocks I keep tabs on, including those I cover across other platforms: extremely low trading volume. And that's important. When volume dries up, it opens the door for algorithmic trading systems or a few big players to move prices with relatively small efforts. In these conditions, even modest trades can distort the market picture. Toward the end of the day, a financial article pointed this out. Wall Street is currently experiencing abnormally low volume. And this isn't a random one-day thing either. Coming into this week, many analysts were already expecting a quieter week of reflection, one that would allow institutions to digest recent data and wait for clearer direction. That's the broader backdrop. But let's circle back to SoFi specifically. From a fundamental standpoint, there wasn't any major news or data release that directly impacted SoFi's business model or outlook today. However, there was a statement from a Federal Reserve speaker, Lori Logan from the Dallas Fed, who suggested that the economy might be headed for a stay-inflationary scenario. That's the kind of phrasing that sends chills through the growth stock sector. Why? Because if inflation persists, it raises the odds of the Fed keeping interest rates higher for longer. And that's poison for companies like SoFi, whose valuations depend heavily on future earnings growth. So just a few words in a speech, even without official policy changes, can rattle stocks like SoFi pretty significantly. Meanwhile, on the company news front, SoFi's technology arm, Galileo, announced a new feature, something called a payment method switch. It's designed to help banks, fintech firms, and brands make it easier for customers to manage their bill payments and stay top of wallet. Now, this is the kind of update that's nice to see from a product innovation standpoint, but let's be honest, it's not a market mover. It's not the sort of announcement that makes hedge funds start buying in bulk, more of an, oh, that's good to know kind of update, rather than a rally cry. Looking at short interest behavior, we saw something a little unusual today. Short sellers returned about 137,000 shares. That might not sound like a big deal, but it matters because when shorts cover, especially in a downward trending stock, it suggests that the move lower might not be justified. It's like they're saying, all right, this dip has gone far enough. Still, as of now, about 13.65% of SoFi's free float is being shorted, which adds up to around 148 million shares. That's a significant portion, and one worth keeping an eye on. Interestingly, the cost to borrow, which tells us how much it costs to short the stock, has turned negative again. That means some brokers are actually paying traders to short SoFi. That only happens when the stock is highly liquid, widely available, and easy to short, none of which screams danger, but it does set the stage for volatility. Now, here's the twist. Even though shorting is cheap and accessible, and there are millions of shares available to short, we didn't see a major short attack today. In fact, shorts were backing off. That's an optimistic signal, subtle but meaningful. Options traders were also active. Today saw about $9 million in call contracts traded and around $3.2 million in put options. That breaks down to roughly 47% of the volume being bearish. And interestingly, a lot of those bearish bets happened near the close, including a large concentration of 12.50-cent strike puts with various expiry dates, some targeting the end of May and others aimed at late June. These weren't small retail trades either. Some of these positions involved hundreds of thousands of dollars in premiums, which suggests institutional hands. The logic behind this? Either they know something that hasn't hit the headlines yet, or they're simply hedging ahead of an uncertain macro environment. Now, from a technical standpoint, bulls are looking for the stock to end the week somewhere between $14 and $14.50. Bears, on the other hand, expect it to slide below $13. So, we're right in the middle of that tug-of-war zone, and where we go from here could depend on whether volume picks up and what kind of sentiment dominates the next couple of trading days. Diving into the dark pool data, a key place where institutions like to move in silence, there were quite a few six-figure and even seven-figure transactions that took place during and after regular trading hours. The majority of these were sells, not buys. That lines up with the day's price action, but it's always worth noting. This kind of activity can sometimes precede headlines we don't know about yet. During Power Hour, those final 60 minutes of trading, a $1 million block order went through, which might have sealed the day's downward trend. So keep that in mind next time you see a sudden final hour movement in the stock price. Right now, SoFi is trading between two support resistance zones. Strong support sits at $13.12 with resistance at $13.46 and again at $14.01. Technically speaking, the stock bounced off its 100-day moving average today and remains wedged between its 50-day and 100-day moving averages. That's not a bad place to be. It's neutral to slightly bullish, depending on how the rest of the market behaves. If a deeper correction comes, stronger support lies down near the $12.20 and $12.11 range. Those are the 200-day and 50-day moving averages, respectively. So, for long-term investors, those levels might present buying opportunities. In terms of market-wide catalysts, it feels like everyone is waiting for the next big spark. Right now, there's not a lot of exciting earnings on the calendar, and even political voices like Donald Trump seem to be toning down the big announcement rhetoric. So what could be the next market mover? Maybe a surprise from the Fed, maybe geopolitical news, or maybe some unexpected earnings beats from smaller names. Until then, it's a waiting game, and SoFi, like many growth stocks, is simply caught in that storm. As for me personally, I've taken a cautious but opportunistic approach. I've sold some $12 and $12.50 puts, meaning I'll happily buy the stock at those levels if it drops further. For now, my goal is to collect premiums, but I'm absolutely open to owning more SoFi at those prices if the market presents that chance. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.